Okay guys, in this video I'll show you exactly how we identify demand and supply zone. So you can use in any time frame. So basically I'm showing in this video, this is a daily time frame and this is the bank Nifty. So demand means price are bouncing from specific level. So this area called demand zone and this area called demand zone. And the supply zone means price are running in a downside. This area called the supply zone and this area called the supply zone. So I'll show you exactly how we trade in a demand and supply zone. So how we will draw that's demand and supply zone. So first, so here I can see this is the last point, this last candle. So we use last candle, the higher and lower point. So let me draw first. So this is a small candle forming a pin bar. Have you seen? So I connected. This is called supply zone. First, let me identify the supply zone. So next, where is the supply zone? This is the red candle. Have you seen? So you just use lower point and the higher point and draw like that. This is called supply zone. So another supply zone is somewhere here. This candle, this red candle is the lower point and this is the higher point and here. So now you can see how price are respecting from this area. So first price drop to this level and the pull back, all right, but not able to reach that supply zone, but these big players start selling from this area and price drop. So again we drawn this supply zone, but here I can see near the supply zone, this is the rejection candle. So all the way price drop, again goes up, but not able to reach that level. So now here you can see a 60% or 78% retracement according to Fibonacci. So later we will discuss about that one. So again price drop to this level. So we connect this red candle, so bearish candle. So similarly here you can see price reach this level and form a bearish candle and price drop to this level. So now most important level where will be, if I connect this supply zone, so let me show you, most important supply zone will be here. So this area, okay. So that is why we are expecting that if price reach that level, it is a probability to pull back. So why this level is important? So let me explain here by using wicks. Okay. So I'm using two window here. Okay, perfect. And here I use India wicks. India wicks. Okay, perfect. So here I can see this is India wicks and daily time frame. Let me zoom a little bit. Okay, so when I connected this line and automatically showing here, so let me draw a horizontal line by connecting this area. Now I can see here, all right, when wicks goes near 12 to 13, price start falling from this area. Have you seen this area somewhere here exactly? So once price wicks goes to this level and wicks start increasing from this area. So similarly, price drop drastically. So next, price not able to go to this level, even wicks drop to this level, not able to reach that level. Okay, so price again drop and price goes near this supply zone. So when price again goes up and wicks reach that level, which level? Near 12, and price starts falling from this area, again goes up and wicks down little bit from this level, but not able to go this level. Again wicks goes to this level. So now I can see price, this area, price goes to this level, again price starts falling from this area. So let me show you here by using this one. So Now you can see VIX reached that level, same area near 12, and price start falling this area. So similarly, VIX right now near this level. So it is a probability if price goes to this level, it is a probability to drop from this level. So that is why I'm not interested to take any buy position, and I don't want to hold my buying position for the long term. So it's the most important level. Okay, so why is it important? According to VIX, when VIX reach this level near 12 and price start falling from this level, have you seen it? Price start falling from this level drastically. Okay, so this is the important level. So another level that is called breaking the structure. So what is the mean? So let me explain here. So first, you can see price drop and the pullback and price drop again. Okay, so this is called structure. So here now you can see when price break this lower point, price are respecting this level. So basically we are using demand and supply and another breaking the structure. So here you can see price drop, create a new low, pull back again, break this structure. This is a structure. So price are respecting these two areas. One is demand and supply, another structure. Okay, so in that case, first they're respecting demand and supply. So next they're respecting the structure. Here you can see pullback goes near this structure, this lower point, again break this level. Okay, price goes, now they're respecting this demand and supply and break this level. Now where is the structure? Somewhere here. Now they are not respecting this structure, breaking the structure, but we expecting that price will respect this demand and supply. What is the demand and supply? This area is a probability pull back again from this level. So let me show in a small time frame. Like let's go to H1 time frame or 15 minutes, whatever. So let me remove this area, everything. Okay, perfect. So here I can see somewhere here. Okay, let me explain from this area. Price drop, price pause, again price start falling from this area, goes. So this is called supply zone, and I respect the supply zone. All right. So again, price goes to this level. This is the supply zone. All right. Price supply zone. Finally, they respect this supply zone and price drop to this level. Now here I can see last here price drop drastically, pull back, drop, goes up. Now price not able to go to this supply zone, that was our supply zone, but they are respecting this demand zone and price drop to this level. All right. So if you now see in the upper side, here you can see price are respecting like a supply zone. Here you can see somewhere here. First, this is our supply zone. Price goes near the supply zone, but next time they are respecting this demand zone. So you just find out that according to projection method, higher high, higher low, higher high, higher low. When price are running in a higher high, higher low, price are running in a two-way. All right. So let me explain. Okay. Price goes up like higher high, higher low, higher high, higher low, higher high, higher low, higher high. And another way, price are going like higher high, higher low, higher high, higher low, higher high, and higher low. So there are two scenarios, scenario number 1 and scenario number 2. Okay, scenario number 2. So in that case, you can see price are respecting this area. This is called breaking the structure, like that. Now in that area, they are respecting this demand zone. Have you seen? Price are respecting this demand zone. This is the two-way. Basically, we identify our entry point. So in that area, this candle, so we are using price action method. Let me explain. So in that area, in a small time frame, like 1 minute or 5 minutes, how price are behaving. So price are creating lower low, lower high, lower low. So after that, they fail to create lower low, forming a higher high, higher high. So in that case, that will be our entry point, and the price are creating new higher high in a small time frame. So same area, in that area, so we are using a price action method in a lower time frame, like that, like that. So finally, they fail to create lower low, start creating a higher high. That will be our entry point, and price goes like a rocket. That is our trading strategy. So I hope how exactly we identify our entry point by using price action method and demand and supply.